So how do you start investing in real estate? Today we're going to go over how to start investing in real estate, and we're going to focus on the money side, the private lending side. So the one thing you'll find out or know getting into real estate investing, there's two real pillars to it. It's finding properties that are under market and then having the money, the leverage, we call it fuel, to actually purchase those. So that's what we're going to go over today, exactly when you start out, how do you get involved and how do you find out about private lending?
Money, 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 hard money, Mike. Money for real estate investing. Let's make money, 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 money. HardMoneyMike.com.
Hey everyone, this is Mike Bond with Hard Money Mike, and we're going over today like how to start in real estate investing and the money side. So, number one question: how much money do I need to start investing in real estate? It just depends on the deal, really, because we've seen investors start with no money into a project, no money into a rental called BRRRR, no money into flips. But if you're looking at that and you're just starting out, you got to find a really, really good deal. And when I mean really, really good deal, those are deals that are in the what we call, like 65% and below ARV. If you don't know what ARV and stuff is, we have some great information out there. You can check it out. If you find a great deal, if you find the deal that you can find, once a year or once in a lifetime, you could get in with 100% financing, no problems, especially working with a local hard money lender. But traditionally, what it's going to take when you're starting out, you're going to typically start out either with a hard money lender or a bank finance, just depends on your credit and your amount of money you bring in on your job. But if you're working with either of those and you're brand new to real estate investing, you're probably going to need somewhere between 10 to 20% of the full project. And now what that means is 10% of the purchase to 20% of the purchase and 10 to 20% of the fix-up costs. So let's just look at an example. If you have a $100,000 purchase and you have a $50,000 rehab budget, if you're at 20%, you're going to need about $30,000, $20,000 down, and then another $10,000 for the construction part of it. So when you're getting into investing, when you're looking at this, how much money you need down, it just depends on the kind of deal you find and how qualified are you right now without the experience. Like if you have a lot of income coming in, if you have a lot of savings and everything else like that, banks and everyone loves to lend to those who don't need money. So if you have a lot of money, you could typically get 100% financing. But the more money you put in, it's going to be cheaper. So you can get involved in real estate with no money, especially on the real estate rental side, but you're going to need some money to really get started in real estate investing. So if you're just starting out and you need money, and we're talking today just about the private lender side, so where do you find private lenders? If you're out there looking for private lenders, it's going to be one of the people typically people who start out in real estate investing, 80 to 90% of them start with a hard money lender, private money lender, whoever they're borrowing from. So where do you find them? Number one source is Google. Go out and see what Google says, see what the reviews are, see who's lending in your area, because what you're going to find is probably 80% of the lenders in hard money are just local to your community. They're just local companies like Hard Money Mike, who lends in a few states, but most of them are just local investors or just small companies who are lending in your area and your areas only, and that's where you're going to find most of those through Google. Another great way is to reach out to people through either sources like BiggerPockets, which is an online forum, or Connected Investor, and ask other people in your area, who are they using, why are they using them, what's their cost, all those kind of things. And lastly, just going to meetups, going to live events and stuff where you could actually talk to other real estate investors, find out who they're using, maybe get an introduction to them. Because when you're starting out, you have to build really a pool of money people. You need to maybe find some hard money lenders. You need to find some private people who can maybe fill in those gaps. And then you also need to start talking to banks, because even if you can't get a bank loan right now, you want to work towards that. So you want to be able to work from private lending to bank financing and probably even just cash sometimes in the future. But we're only going to start with private lending, but we want to know how to get the bank financing too. So, start reaching out to those people. We have a great little class that we teach about, we call it the Fuel Up Challenge, that you may want to jump on board. And what it goes through is like how to find all these people. What are the credit scores you need? All of those things. So we'll put a link below, and we'll probably even discuss it a little bit more at the end of this video. So since you're just starting out in real estate investing, one of the big questions that come out is like, are private lenders safe, hard money lenders safe? Or are they just loan sharks? Are they just going to take advantage of me, take all the profits from my business? Number one, there's probably a few of those out there, like a very small percentage who are looking more for a loan to take over properties. But the majority of hard money lenders, private lenders, all they want is to lend out their money, get their money back in their interest. That's what everyone is focused on. Hard money private lenders are in this business to get a return on the money they put out. So they are safe, but just like anything else, you need to shop around. So that's where like Google helps out. Check the reviews, check what people are saying about them. We said, go to BiggerPockets, go to Connected Investors, go to forums and talk to people. Like, how are people being treated by the hard money lenders? Because hard money and private money is no different than anything else. There's really good people in it, and there's some really not so good people in it. So it's on you as the real estate investor, as the person who's in charge of this business, to make sure you're working with some of the good people. And the best way to do that, besides experience, and you don't want to experience the bad stuff, is reach out, get the referrals. Google's out there for a reason. Check them out, see what they've done, ask for referrals, or ask for them to give you clients that they've worked with, so they could give you references of who they've actually closed loans with. So that all comes down to making sure when you get into this, you have a good list of lenders, that you're not just connected typically just to one, because you're going to need them for different reasons, different kinds of loans. This money, like I said, is the second pillar to real estate investing. So you need to make sure that you have a lot of money options. So you have something that's quick, something that's longer term, that maybe is shorter. So focus on building your base of lenders, so that way you're safe, that who you're working with, and you're going to be taken care of on the money side of real estate investing. So if you're new to real estate investing, you're also trying to figure out the cost. So number one, like, what are the typical interest rates that private money lenders charge, hard money lenders charge? And it really depends on a couple different factors. This is July 2022. Inflation is hitting, the Fed is raising interest rates. So we have seen some increase in pricing. Now it's probably somewhere between 9 and 11% in a simple interest rate, compared to just 6 months ago, where it was probably 2 points less than that. So always be checking, always be looking. And another thing with the interest rate, we have this come up a lot. We just had another lady the other day said, "Oh, I just talked to a lender, they're going to charge me 9% interest, and I only needed it for 3 months." So she had almost an $800,000 loan. So she's like, she was taking the 9% and timesing it by the total loan, and figuring she would have to pay that no matter how long she had the loan. And that's not how interest works in hard money. So you have to understand, when they give you an interest rate, that's an annual rate, and you're just going to be paying it on monthly chunks. So make sure you shop around. The more money you put into a deal, the lower the interest rate will be. But typically in real estate investing, it's not only about the interest rate, but it's on how fast someone closes. Because we see it all the time where people could, if they could close in a week or 2 weeks earlier, they actually get a better deal. So interest rate becomes almost a non-factor, because the bargain, the deal they get on the property accounts for some of the extra interest rates. But typically you're going to find private lending, hard money rates are anywhere between 2 to 5% higher than banks. So if you could go to banks, and you have the time, and you have all that stuff, that's probably the path you take. So if you're new to real estate investing, and you're looking for what's the cost, what's the interest rate for private lenders, make sure you remember a couple things. Number one, the interest that they give you is an annual rate, and you divide that by 12, and that's typically your monthly payments. Number two, hard money is going to be a couple points higher than banks, but typically where you use hard money is when you're either new or you need to close a deal quick. And closing it quick means you get a better number on that, better financial terms on that project. So there is always a benefit in using hard money, so look at that too. So interest rate is just one of the things you use. Next, we're going to go over what are the costs associated with private lending that you should know before you jump in as a first-time investor. So we've talked about interest rate charges from private lenders. Now we're going to go over what are the other charges, what are the other costs associated with private lending. The one thing you have to understand with the money side is there's two sets of costs. There's the interest rate, and then there's the origination, there's the appraisals, everything else that a lender will add on to your loan that at the end will basically have money coming out of your pocket. And you're going to find a couple different lending strategies out there. So you have to know these. You have to be able to analyze them differently. And just a little plug up front, we have a great tool, the Loan Optimizer, where you could check one lender against another lender, because this is why you need to check those lenders out, is because one lender may charge like, hey, we're only charging you an interest rate like 14% and a very low fee, and that may be great. We have a lender here that charges 14% interest, but only charges about $1,500 in fees, where everyone else is maybe in the 9.5 to 10.5 for the interest rate, but their fees are 2.5, 3%. So what does that all mean? How do you know what's better? And that's why you use a tool like Loan Optimizer to find out what's better for your particular deal. So you could go to hardmoneymike.com, you could download that Loan Optimizer, and you could check different lenders and see what they do, because every lender is different. Lenders are going to charge you origination charges. So that's basically the profit for the lender or the salesperson to make, and it's typically a percentage of the loan amount. So they'll charge anywhere between 1 and 4 points. A point is 1%. So if they're charging 2 points, that's 2% of the loan amount. If you're taking out a $200,000 loan and they charge you 2 points, that's 2%. That means you're now taking 2% of that loan and paying them in a fee. There's processing charges. Some lenders have them, some don't. Processing fees could be anywhere from $300 to $1,500. Some lenders charge underwriting fees, some don't. Some companies have appraisals, some don't. Every one of these things, some lenders will have 8 or 9 of these fees. Some people have 1 or 2. You need to shop around. You need to find out what's best for you. And the only way you do that, I'll do another plug, is something like the Loan Optimizer, because you want to know your whole cost, your interest. Some people just get hung up on the interest, because when they look at it and they're like, it's 10% and the banks are charging 6%. That's just too high. So, or they get caught up in the costs and the points. You need to find out what's best for each transaction you do. Shorter term loans, it may be better just to go with a higher interest rate or something with less points in it. But you're going to find each lender has somewhere between 1 and 8 different costs that they put into your loan. Each lender is different. There is no standards. There is nothing like in the consumer loans where they have to give you every detail that they're going to charge and put in there. They will tell you, but it's not going to be in this nice little form. That's what we give you with that Loan Optimizer and what you're looking for. So you're going to find origination points. You're going to find underwriting or processing. You may find legal fees. You may title or appraisal fees and escrow fees. They may charge you to set up an escrow, and they may even charge you to take draws out of the escrow. All of these things add up to the cost of the money. You need to know this, because this is, like I said, the money side is where money is made also. So you need to be on it. You need to understand the money side, and you need to understand the cost that each lender is charging you for each project. So getting into something new, there's a lot of information coming at you. There's a lot of things that you need to kind of take in, consume, make sure you feel good about it. I mean, we're here to help you. We have this video. We have a lot of other videos out there. We've done tens of thousands of transactions, billions of dollars in loans. We've seen a lot of different everything that's happened out there. We help people with hard money. We help people with traditional loans. We help investors with bank loans. Whatever it may be, if you have a question, just reach out to us. But really, get educated on what you're getting into. Understand there is the finding the property side, but none of those get purchased unless you have the money side too. So get in, understand that. Subscribe to our channel, share some of these videos, help other people out. Also, if you're just wanting to understand, get more comfortable with the money side, we have a great challenge. It's the 30-day fuel challenge. We look at real estate as your vehicle. That's what's getting you somewhere, but you need the fuel for it. You need the leverage. You need the money to make it happen. The easier the money, the faster the money, the cheaper the money, the quicker you're going to take off in real estate investing. So check below. It's a great little program that'll take you through figuring out your credit, figuring out how to find bankers, how to find hard money lenders, and OPM. You need them all to be successful in this business. You may not need them all now, but you'll need them all real soon. The people who understand the money side are the people who will become more profitable faster. So why don't you be one of those people? Check below. Reach out to us if you have any questions. We'd be glad to, just put them in the comments or whatever. We'd be glad to get back to you. And as we always say, happy investing.